Welcome, everybody. My name is Michael, and today we're discussing about FTX, Sam Bankman-Fried, away from the court drama right now. What's going on inside SBF's head? Well, let's go back to the beginning. From the beginning, he said he wanted to sell FTX. He testified he wanted to sell FTX to Binance because Binance at the time, and still, they're the largest crypto exchange with over $4.6 billion of volume flowing through daily. That's a huge amount of money we're talking about. And with them, they're essentially like the Amazon of the crypto world. Well, back in 2019, alongside co-founder Gary Wang, they decided to create an exchange that specialized, had a subset of niche of crypto traders for margin trading. Margin trading, essentially trading with loans to potentially make more money, but with that, you have a lot more risk associated with that. But as with other companies such as pawn shops and payday loans and buy here, pay here's, the higher risk, the more interest, the higher percentages, the more potential money for the business itself. The casino always wins. The house, hello, FTX was the house because they had proprietary software, right? Paradigm shift in crypto. Well, back in 2019, here we are. This is what we're going to do. We're going to offer margin trading to our clients, and with our software, we're going to be able to, just like every other exchange, we're going to be able to cash out and find certain habits, certain risks, elements to a profile that we can analyze so we can make the most amount of money. Certain elements such as, for example, with margin trading, this is why I wasn't a huge fan. If you're leverage trading and, for example, you're going 100x, something crazy like that. Well, if you read the fine print, a lot of these exchanges say, well, if we're getting close to, hey, there's a 0.5% or a 1% flip, it's not going to go 1%, it's going to go 0.5% because the other half goes to the fee, the house closes it, see it, that deal is liquidated. So there's always the little fine print that, yes, we're going to probably do it a little bit sooner than you anticipated. And with that, oops, you lost all your money. Now, there is a huge segment of the market that wants to make outsized bets because it's just like playing the lottery, essentially. Well, yeah, you could lose a lot of money, but what happens if you win? If you win and you do 100x profit, holy moly, you're raking in the cash there. There's your golden ticket, as long as you bet right and you get a little bit lucky. But with that, at the time, SBF already had plans. I mean, everybody, when they're starting up a company. When I worked with one of my favorite ICOs that I personally was involved with, or a failure, really, of a company who went bankrupt, essentially. But my favorite because I was involved with it. I saw the potential behind it. We just had bad timing, and we wish we had more funding and probably a larger team. And there were certain things that should have been addressed, but we worked hard. And when I worked with TravelBlock, we wanted to be the Expedia of crypto. And there was a company later that partnered up with Expedia to become the Expedia of crypto, whatever. But we failed, and that's okay. We learned a lot from it. But our whole intent from the very beginning was, okay, so outside of blockchain, we do have this company, we do have this technology already. There's a bunch of money being made here. Expedia is going to love this idea. We already knew from the very beginning, if this is successful, we don't want to keep this company. We want to sell it. That's the golden ticket, because then all the risk, everything goes out the window. You just sell it, boom, you cashed out, and now you can take that initial money that you invested it, 10x, 20x, 30x, and take that for something else. Do whatever else you want with it. You're already a millionaire or even multimillionaire, billionaire at that point, right? So that was our intent. Yes, technically, we're going to be the Expedia of crypto. Oh no, Expedia's our competitor. Oh no. But really, we wanted to get bought out by them. Now, our idea failed, but anytime startups happen, they look for an enemy, the nemesis, the really big guy, the whale, David and Goliath. Who's going to be able to buy you out so you're able to make the most amount of money? That's where it all comes from. So I'm not surprised that he was already planning from day one. Okay, let's build this $1 billion exchange. Let's sell it to Binance. And at one point in time, right when it was collapsing, Binance actually was interested in purchasing it. Now, it didn't turn out very well because as it was crumbling, Changpeng Zhao, the CEO of Binance, said the issues with FTX are beyond our control or ability to help, because he took a look at pretty much everything that was happening, where John J. Ray III, who's now the CEO of FTX, who was appointed as the attorney, he's been in charge of many bankruptcy proceedings and cases with companies going back as far like Enron, 2 decades ago. Enron, which was a massive energy crisis in California, taking advantage of Californian customers and huge billion-dollar scam. When that company went out of business, he was dealing with a cluster. I mean, this was a mess. It was chaotic. And that attorney, now the CEO of FTX, said, wow, Enron was nothing in comparison. He said it politely, but Enron was nothing in comparison to FTX. I've never seen a company this bad, because first of all, you had, hey, do you want a promotion or loan, with an emoji on Signal and Slack? Hey, do you want a promotion? Boom, up or down face. There was no documentation of where funds were going. Personal expenses were paid with client funds. Billions of dollars were not tracked for. Billions of dollars that were lost were also, I mean, the books were cooked, right? Potential cases of money laundering. You had such disorganization, and it was mostly due to incompetency, that there was no documentation. Certain taxes were paid. I mean, there was a whole laundry list of, you had fake employees in the Signal channels. You didn't even know how many employees there were. You didn't even know how many clients there were. At one point in time, I mean, every single part of the organization was disorganized, and you have Binance that is on point with most things. Yes, certain they're just so large, just like Amazon, you're going to get lawsuits. They're on point. They're the good guys in this case, in crypto. You know, they know what they're doing. They take a look, and they're like, wow, they're grabbing themselves by the hair. They're about to rip out their hair. Yeah, no, we're backing out of this. Sorry, FTX. This is way over our heads. This is, wow, you guys are going bankrupt. That's it. Sorry, we can't help you. Early on, Sam Bankman-Fried said getting customers was a little bit of a challenge, but through word of mouth, they were able to spread it from nothing to hitting $3 million in revenue per day by 2021. And in 2019, it was a total revenue of $20 million. Not bad. And for crypto startups, you got to remember, this was after already the big crypto crash. Now, yes, you had people who had millions of dollars behind them and connections, and that really, the network is that powerful aspect. That's how word of mouth really starts. It's not, oh, I tell one person and Susie tells Bob. It's, you have this massive multi-million-dollar network. You've got a bunch of investors, and then you can turn $1 million company into a $1 billion company. It's like, you know, a small loan of $1 million, right? Well, obviously you're going to have a greater chance at success. One of FTX's first selling points when it came out was its risk engine. Bankman-Fried essentially testified that compared to the other exchanges at the time, first of all, it's kind of like they had a monopoly over it, because their risk engine, that was the real profit maker. That was what they thought, hey, we could sell this to you know, the big boys. It was responsible for deciding when traders' positions would be liquidated, taking the money, taking profits. And it took a more comprehensive view of customers' accounts. Okay, this is what's going on. This is their risk profile. And with that, FTX co-founder, SBF, said, you know what? He didn't want to write or read the exchange code as it was being built. Rather, it was Mr. Wang who built the exchange line by line, and then Bankman-Fried gave input from there. Okay, let's see what we can do from a philosophical perspective. Cross-margin trading was also part of FTX initially. That was pretty appealing to a lot of traders back then. The feature allowed traders to use excess margin on one trade to satisfy margin requirements on another trade. Binance was actually FTX's first investor, putting $80 million into a seed round. It was BNB that they used which BNB exploded. And FTX wanted to do FTT, their own exchange-backed token, which was inspired by Binance, but ultimately it failed. FTT experienced a flurry of withdrawals. It led to FTX filing bankruptcy and realizing, hey, we've got this massive $11 billion hole in our accounts. Since it was essentially a run on the banks or a run on FTX at the time, since there were so many FTT withdrawals, FTX had to admit we don't have the reserves. It's not a 1-to-1 ratio. We just don't have enough money. With all these withdrawals, sorry, we're in the negative here. And people freaked out. And then the price of everything collapsed. So what's interesting is that Binance, even though it did invest $80 million of BNB, eventually was bought out by Sam Bankman-Fried, by FTX, through FTT and other tokens, according here to a stake around the $2.1 billion mix of altcoins. Now, a big part of it was Binance actually moved all of their FTT they received, and they started selling it. You have this massive whale that started selling it, and that was another part of why, really, Binance kind of led to the downfall. Binance created FTX in a way, and Binance led to the downfall of FTX in a way. Now, if they were a properly run company, probably things would be a lot different, but it certainly didn't help. There was market manipulation, but at the end, is there manipulation? At a certain point, Sam Bankman-Fried bought back out through FTT. They probably could have done it through another method, but it is what the reason they did it is, like so many ICO companies, is because you're able to manufacture as much of your token as you want, and in a way, it's cheaper. If I have $100,000, or I can produce potentially $100,000 worth of tokens, well, these tokens are essentially worthless until they're sold, until there's actual value assigned. There's potential value of $100,000, but we don't know, because it can all fluctuate, and suddenly $2.1 billion of FTT can turn into $200,000. And that's welcome to crypto 101, really. Now, Sam Bankman-Fried testified that the FTT that they produced, the main reason they wanted to have it was to provide client benefits and obviously to make more money, but it would be similar to a company buying back its stock, where through tokens, there's a burn. There's certain projects have burns where you burn your tokens to reduce the supply so the value of them can skyrocket. And obviously the whales holding the most, aka the company, would be able to make a lot of money through it. But it provides value because to those initial investors, the customers who are holding FTT at first, every week essentially you get the benefit that your FTT would be providing more value through these buybacks, through these burns. Now, ultimately, it doesn't matter when FTT completely collapses in on itself, but it wasn't the only company. You had a lot of other projects, such as, remember, 3 Point Arrow Capital and Terra and Luna, UST, and that whole thing, and how you had an arrest. Oh my goodness, it's been so long. An arrest in Singapore. Well, he fled Singapore, and then he was arrested in Europe. It was a crazy ordeal, the founder of that. So with all that has happened over the past 2 years in cryptocurrency, it's kind of exciting to be able to close out that chapter. And now we're in a much better realm where Bitcoin is at $34,500 and the market cap is growing for all altcoins. And hopefully we're going to see greater things as we get closer to the halving. But with that, we should hopefully have some very, very good bullish news for next year. Anyways, with that, we are closing out this video. Just want to thank you so much for watching it today. If you enjoyed, please click the link below for my AI channel. Subscribe on over there. It helps greatly, and we will see you in the next one. Take care.